Hi everybody, tonight on Business Live, government's $5 billion Eurobond oversubscribed. Finance Minister Ken Ofori-Atta says this sends strong signal to investors that investors actually have confidence in Ghana's debt sustainability plan. We'll speak to an analyst. Also coming up tonight, National Pensions Regulatory Authority to prosecute employers who default in paying pension contributions, plus outstanding negotiations on African continental free trade to conclude before end of the year. We'll hear from the Secretariat. Thanks for being with us tonight. My name is Darryl Kwao. We've got details right after this. All the major commodities in red tonight. Cocoa losing some $84 there. Let's turn to tonight's first story. Government's $5 billion Eurobond has been oversubscribed. The bond issuance comes after a series of fixed income virtual meetings held locally across 3 days with investors from the United States, United Kingdom, Europe, Middle East and Asia. A statement from the Finance Ministry reads, we're going to put that up for you. It says that the issuance was 2 times oversubscribed at its peak, commendable amid a global pandemic. Ghana is the first emerging market sovereign to add a zero-coupon bullet tranche to its bond financing portfolio. This is significant as it enables the government to create fiscal space to build the economy back better. The statement also goes on to say that a zero-coupon bond is a bond that does not make periodic interest payments during the tenure of the bond, but is sold at a discount to its value at maturity. Now, commenting on the bond, the Finance Minister Ken Ofori-Atta, whose renomination as Finance Minister after President Akufo-Addo's re-election last December was also approved by Parliament on Monday, said this historic bond issuance is a strong signal that investors have confidence in a plan for debt sustainability, economic recovery and growth, and that Ghana remains a pillar of stability. Part of the proceeds, the statement says, shall be used for domestic liability management. For example, using $400 million US of the zero-coupon bond to refinance domestic debt with an average interest rate of 19% will net Ghana savings of some $200 million over the 4 years, Mr. Ofori-Atta explained. Now, the process will, alongside conducting liability management, also support the budget deficit by funding growth-oriented expenditures. And so that's a bit of a statement issued by the Finance Minister Ken Ofori-Atta there. So Ghana has become the first African country to issue a zero-coupon rated bond. What does this mean for us? Here is Dr. Gideon Boako, who is economic advisor to the Vice President. He spoke earlier with my colleague, Daniel Dati.
Yeah, so basically, bonds, traditional bonds come with interest or coupons. So they are coupon-bearing bonds. And it means that if you issue the bond at a coupon of, say, 10% or 20%, it means that for the periods matching up to the maturity of the bond, if the bond is for a tenure of 5 years and the interest or the coupon is 10%, it means you would have to make an annuity payment of 10% of the total value every year until you get to the maturity, where you have to pay the face value of the bond plus the final payment, coupon payment due. But in this particular case, if you have a zero coupon bond, it means it is a non-coupon bearing bond. You don't pay any interest on that particular bond, except that the bond is traded at a discount. So you trade it at a discount. If, for instance, the par value of the bond is $1,000 and you are trading at a discount, you can take less than $920. So the $80 becomes the difference, and that becomes the discounted rate. So coupon bonds usually are traded at a discount, but they don't come with interest. And I'm sure once the finance ministry comes up for us to know how much you raise from the zero coupon bond, the number of years that we're going to have that, we can go into the mechanics and the calculations of that for you to see the gains that government will be making at the end of the day for securing a zero coupon bond. And I must repeat, this is the first time in Africa that any country is securing a zero coupon bond, and that is quite big for Ghana.
What do you say to those who simply say that we are just borrowing more money in a different way, but it's still the same borrowing that we are doing?
Yeah, I agree to some extent with those who make such comments. You know, borrowing or debt is not what everybody is enthused about, but the practical realities on the ground is that no government can run without some element of debt. It's just like running a business. Usually, businesses are run with basically three main sources of funds. It's either you have your own equity funds, which may be your own investments that you put down together for a number of years, and you get into your business, or you decide to go to the debt market to borrow at a commercial rate or whatever to get a loan to put into your business. Or if you're lucky, you get some family members who support you or people who give you grants and all of that. So the same way government is run. So government usually, as government machinery are oiled, with tax revenue. So the tax revenue basically becomes the equity component of government into the activities that it wants to execute.
Okay.
And then if your tax revenues are not enough to meet all the expenses that you need, the expenditures you need to make, you need to go to the debt market to raise some funds.
Okay.
If that is also not enough, then you rely on grants that are coming from other donors and other countries that want to show you sympathy in that regard. Unfortunately for us in Ghana, the tax revenue that we raise are not enough to take care of all the expenditures government wants to make. And basically, when government gets the tax revenues, it takes care of just about three items in the budget line, and the revenues are gone. Government gets the tax revenues, looks at item one, which is emoluments, pays salaries and all of that, uses part to also pay interest on debt that we have borrowed over the years. And the third thing is to use the tax revenue also to pay statutory obligations like GET Fund, District Assembly Common Fund.
Which is what has led us to this point where we have to borrow as much as we can.
Okay, so some reaction there from government. That was Dr. Gideon Boako, who is a special advisor to the Vice President, speaking on the oversubscribed $5 billion Eurobond. I want to bring in investment analyst with Synergy Ghana, Mike Kobler, for some perspective to this. He has got experience in these kinds of things. Great to have you on our program tonight. And so I'm pretty sure you have read through the statement released by the Finance Ministry. The Finance Minister saying that the oversubscription is a strong signal of investor confidence in our debt sustainability plan, in our economic recovery post the pandemic. Are you as upbeat about what you read concerning the outcome of the Eurobond?
Well, I'll say that raising money in a post-pandemic period is quite difficult. So for them to have achieved the 3 billion mark is commendable. But don't forget that our target was to raise a $5 billion. But so even though it has been oversubscribed, the reason why probably we did not take the entire $5 billion was because of pricing. Obviously, you do a book build and you have various pricing levels coming through during the pricing of the offer. So you draw the line at a point where you think that you have gotten an interest rate which is sustainable or comparative to what you have raised in the past. If you compare the raise that we got this year, you realize that it's slightly above what we got last year by almost 100 basis points for each of the segments that we are looking at, apart from the zero coupon bond, which is a novelty. So having said that, our target was to raise $5 billion. If we were subscribed and the pricing was great, we would have picked all the 5 billion. But once we were able to cap at 3.025, it just means that the pricing that came subsequently beyond the 3 billion was ridiculous or couldn't be justified. And that's why we had to stop at 3 billion. So yes, it's a good indicator that yes, investors still have confidence in Ghana, but the reason why we couldn't break in all the 5 billion would definitely be because of pricing.
Okay, and so just for people who are watching right now, so the fact that the bonds were oversubscribed does not necessarily mean that we got the $5 billion that we wanted. That's the point you've made, right?
So the point I'm making is that if it was oversubscribed twice, okay,
yes.
so if it was oversubscribed twice, if you went to the market to raise 5 billion, and you have 2 times oversubscription, it means that you had 10 billion cash available on the market to be picked. Okay. The only reason why you will not pick the 5 billion that you originally set out to pick is because the pricing that you were getting were ridiculous. So investors put money there, but then there's a price to it. So if you realize that the price at which the bond is being offered is above your target, then you only pick up to the point where the interest rate is competitive and can be justified. Because otherwise you pick all the 10 billion available, which is oversubscription, but you may be paying north of 12% or more for it because that's what investors want. So since our target was originally 5 billion and we're able to only pick 3.025, it just means that the pricing for the other component, which is about 6 point something billion, which was on offer, the pricing was not competitive enough.
Well, what would you say to some people who think that it's also a signal that the investors are not really confident about our economic prospects, and so yeah, the bonds were oversubscribed, but the pricing was ridiculous, as you put it earlier?
No, I wouldn't say it's a lack of confidence or no confidence. I mean, pricing money has got alternative uses, and don't forget that we're not the only ones who are looking for money across the world. The whole world went through this pandemic. The whole world has gone through a recession. So countries in Europe, countries in Asia, I mean, countries in the Middle East are all on the market trying to raise different kinds of funding. Okay, so it's a question of investor perception. For those who already know Ghana well and are associated with our race, are very happy to put their money at the kind of rates that we had. I mean, if you look at the pricing for the 8-year, 13-year bond, it's very similar to what we got last year. I mean, slightly below 100 basis points, as it were. But then beyond that, you have other people who are offering and saying, well, we'll be looking at our GDP, the gross GDP to debt ratios and all that. We will give you the money, I'll give it to you at this higher rate. And if you don't think that works for you, you leave the money and then go to the market at another time when the market is more favorable.
So you think it was a smart move by government to sort of say, all right, we can't go beyond this limit, and so we are just going to take below the 5 billion if that's what we are going to get?
Precisely. I mean, I think it's a good strategy, because then even though you set out to raise 5 billion, the 5 billion is a program for the whole year, okay? And this year we're just about ending the first quarter. So if you raise more than, 50% in a pandemic period, that is great. You just have to time back. I'm sure that the managers of the bond will be looking at the market continually to see a window of opportunity where they can get a much lower rate, and then they'll go to the market again and pick it at a rate which is competitive.
You had the special advisor to the vice president tout the zero-rated coupon bond and the savings that we are going to make on it. As somebody said in the office, that is smart borrowing. Your thoughts?
Well, I mean, zero coupon bond at any point, like he rightly said, it's a cash flow management kind of instrument. I mean, you're not paying the interest rate continually over the 4-year period. You should at a discount. So at the end of the 4 years, then you pay the full value. So let's say you issue it at 100 cedis today. It's 100, maybe it's 100 cedis zero coupon bond issued at a discount of maybe 25% or whatever. So you get 75 today, but come 4 years time, you pay the 100 Ghana cedis, which is the differential between the 75 and the 100. That's how the mechanism works. So over the period between now and the 4 years, we are not paying annual interest rate like you'd have done for the other bonds that are not zero coupon rated. And it's a novelty. It's a cash management tool, which it helps our portfolio or helps us to balance our portfolio.
All right. My final question would be about what this means for our debt situation as well.
We will need to interrogate how much is going to go, how much of this money that has been raised is going to go into productive areas, and how much we are going to use for our debt management strategy or to pay down the debt that we have. We've been told that we are going to use part of it to also manage our domestic debt. But we need to understand how these components work to be able to see in aggregate how this is going to affect our debt to GDP ratio. But having said that, we are about 3-point-something billion, we are 1.5 billion. If we even use half of that or 2/3 of that to manage our debt situation, it means that we have increased our debt stock by another 1/3 of the 5 billion that we intend to raise. So yes, that is going to go up. Or conversely, we have to work hard to make sure that our GDP figures also improve. Once our GDP figures improve, that would then tilt the ratio, because it's a denominator, numerator and denominator kind of ratio. So if our GDP grows higher than we expect, and it would then go to complement the debts that we are borrowing, and then it would not be horrendous.
All right. Mike Kobler there, investment analyst. He's with Synergy Ghana. Thanks very much for your thoughts tonight. We appreciate that you could join us. Now, the National Pensions Regulatory Authority has moved to prosecute employers who default in paying employees' pension contributions to the appropriate trustees as demanded by law. According to its chief executive, Hayford Atta-Kofi, the powers to prosecute defaulters will make his outfit's operations easier and increase transparency. He further revealed that the Pensions College will begin operations in the second quarter of this year.
Key things that we've rolled out this year: we have introduced a risk-based supervision system, which is going to help us to automate our work and to be able to regulate the industry and get real reports from them in terms of the risks that are available in the industry. So we have put in this supervision system, which we want you to understand. And also we want to roll out a pensions college, which will help with the knowledge and understanding of the practitioners in the industry, so that they will be able to understand what their roles and their responsibilities are, especially as trustees, and how to look after the funds that they look after on behalf of the contributors. And then also we have been given the powers to prosecute. There are a number of employers who default in paying contributions on behalf of their employees. And when they retire, it becomes very difficult for them to retire on decent pension. And we've been given that powers to be able to prosecute these defaulting employers. So in fact, it was a gap in the law, in the sense that at the very beginning, SNIT, which is a provider and also the manager of Tier 1, was given the powers to prosecute. But in as much as the Tier 2 was made mandatory, the powers to prosecute the defaulters of Tier 2 was not put in the law. So there was a kind of a gap. And as regulators, it made our job quite difficult, because the level of default became very high because there was no prosecuting body. And that is why when we realized that gap in the law, we applied to the Office of the Attorney General and we were given those powers. So it makes our job as regulators complete, and to be able to plug that gap of Tier 2 defaults.
So about 15 employers are currently facing criminal prosecution for failing to pay pension contributions of their workers. Mr. Atta-Kofi also indicated that 3 million cedis has been received by corporate trustees as of the end of January 2021, after the authority issued final demand notices to 60 employers as a reminder to make good their indebtedness or be prosecuted.
Beginning of since July 2020, we wrote to quite a number of them on various sums that they still owe their contributors. And we were expecting about 4.7 million, which was in arrears. And so far we've been able to realize 3 million. But there are some employers who have still not responded. And there are about 15 of them who are currently facing criminal prosecution at various different levels and stages. And we hope to be able to get the the 1.7 which is still outstanding from these employers.
In other news today, work is far advanced to finalize all outstanding negotiations under the Continental Free Trade Agreement before the end of this year. Director of Services at the African Continental Free Trade Secretariat, Emily Imboro-Ndoria, assured that the outstanding rules, which include protocol on trade in goods and services, will be completed this year. She was speaking at the graphic Stanbic breakfast meeting in Accra under the theme Leveraging After the Critical Success Factors. Here's a report.
These negotiations, which are part of necessary conditions to ensure the success of the program, has been facing challenges from member countries despite commencement of the agreement. According to Emily Imboro-Ndoria, the standing block for the outstanding negotiations is due to individual interest by various countries that have ratified the agreement.
So far is the differing, of course, interests of the different countries. So we have to take the interest of all the different countries into play when the negotiations are going on. So sometimes you have very big differences, of course, between the bigger and the smaller countries in terms of what is their interest. They have bigger companies, their SMEs are bigger, because even when we talk SMEs in South Africa are not the same as SMEs, let's say, in a country like Niger. So how do you bring these countries together? And if you saw in my presentation, I did mention that there is some asymmetric or special and differential treatment that is being given to the least developed countries. And this is for them to be able to also participate effectively and also to feel that they have the necessary incentive and mechanisms then to set up.
Technical Director of the Ministry of Trade and Industry, Anthony Nyami-Befi, assured the business community that Ghana is working together with the African Union to use all channels available to deal with their concerns.
Based on the challenges that we had for the 8 regional economic communities, this time around, they came out with a comprehensive protocol on rules and procedures for settlement of disputes, so that if countries are not conforming to their obligations, the other member states will have the right to go there and challenge them. So be assured that this time around, because we have a very solid dispute settlement mechanism, some countries are not ratify the agreement and then still ban some of the products. Once you have liberalized 90% of your products and then later the 7% sensitive ones, you are obliged to continue to allow countries to export under your tariff liberalization schedule.
Headline sponsors for the event, Stanbic Bank believes that such platforms have become critical in the harmonization of Africa. Kwamina Asumenin is the Managing Director of Stanbic Bank Ghana.
Our purpose as a bank is that Africa is our home, we drive our growth. And after the 8 core principles that underpin AFTA focus on economic development. And so the alignment between our purpose and AFTA's vision is undeniably strong. And so we really don't have a choice. If we want to be successful in Africa, then we must stand behind AFTA and make sure that AFTA becomes successful. And so our focus is to see ways in which we explore ways in which we can, build up local giants that will be able to, realize some of the opportunities that AFTA does present. And that's what we've been doing in Ghana for over many, many years.
Joy Business is the official media partner for the breakfast meeting.
Now, to conclude tonight, Executive Director of Financial Literacy Foundation for Africa, Dr. Richmond Frimpong, educates us on the place of Tier 2 pension funds.
Our budget highlight today on Money Lab is about the place of the second-tier pension. In the budget reading, there is a mandatory provision for the payment of Tier 2. But the policy is that a number of people, a number of employers are doing well with the Tier 1, but so many also are not paying the Tier 2 at all. The budget direction in there is that everyone who is paying Tier 1 and not paying Tier 2 is going to be taxed to do same. And so check if your employer is not contributing to your tier 2. Check if you, the employer yourself, you are not paying tier 2. Get your books in order before the government kicks up and chases you, because there is going to be an intense supervision to make sure that there is no lack or there is no outstanding numbers regarding the tier 2 of your employees or the tier 2 of the people you are working with. Same with you, the employee. If you know that your employer has not paid, begin to push them into this very highlight so that they regularize before the government comes after you.
And thanks for watching our program tonight. There's more news on our website, myjoyonline.com/business. My name is Darryl Kwao. We'll see you same time tomorrow.